program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View here at AusBiz. I'm Andrew Gagan. Thanks for joining us. Let's get across what happened overnight. A bout of selling, capturing global equity markets, despite no significant market moving news, I should say. Stocks on Wall Street saw falls there. The S&P 500 and Nasdaq easing from the previous session's record closing highs, and the blue chip Dow suffering its deepest decline amid concerns of a bubble forming. JP Morgan Chase Chief Executive Jamie Dimon has said there's a heightened risk of a significant correction in the US stock market within the next 6 months to 2 years, citing factors including geopolitical tensions, government spending and remilitarisation. JP Morgan is among the big banks which kick off third quarter earnings season next week. Among the mega cap tech stocks, shares of Tesla fell on news of an investigation into its full self-driving system, with the reports of crashes and violations of a series of safety concerns there. Delta Airlines shares gained altitude after beating an upbeat forecast for the current quarter after posting stronger than expected third quarter earnings, with other US carriers gaining. US retailer Costco rose after reporting September sales data. Shares of lithium producer Albemarle rose as China tightened export controls on rare earths. And shares of the gold miners have fallen as the bullion price tumbled more than 2%. And in Europe, Italian luxury car maker Ferrari notched its worst single-day drop on record as its long-term financial targets disappointed investors despite unveiling its first fully electric production vehicle. Well, Federal Reserve policymaker John Williams, a candidate to become the next Fed chair, has advocated further easing this year, citing weakness in the labour market, saying the risks of a further slowdown in the labour market is something I'm very focused on. If anything, the information suggested that the tariff effects have been a little smaller than I expected. There's more downside risk to the labour market. Well, in Europe, the minutes from the ECB's September meeting revealed that officials considered another interest rate cut, saying while a further rate cut in the coming months would better protect the inflation target, both under the baseline and across a range of adverse scenarios, the materialisation of upside risks would instead warrant maintaining the current level of policy rate. US Treasury yields are higher after an auction of longer-dated bonds pointed to average demand amid the shutdown of the US government that has blocked the release of official economic indicators. US 2-year Treasury yield rising to 3.6%, the 10-year at 4.15. The US dollar index up around 0.5% on the day. The Aussie trading at 65.6 US cents. Oil prices are lower after Israel and the Palestinian militant group Hamas signed a ceasefire agreement in Gaza with Israeli hostages to be exchanged for Palestinian prisoners in the first phase of President Trump's peace plan. Brent crude futures down 1.5% at $65 a barrel. Copper's little changed, iron ore rising 1.5% to $105 US a tonne. And the Gaza ceasefire plus profit taking and a higher US dollar has seen gold fall 2%, back below $4,000 US. And silver has followed suit, easing from a record high of $51 an ounce. Bitcoin is lower at $121,000 US. Well, for more on US markets and rising concern of a stock market bubble, I caught up with John Blank from Zacks Investment Research.
Andrew, the stock I would point out to you that just kind of personifies the idea of a bubble. Let's talk Palantir, which is the defense electronics company. $3 billion in revenues, $3 billion in revenues in 2024, growing to $4 billion in revenues in 2025. 25% growth. The market capitalization of this company is $435 billion. $435 billion. The forward PE ratio is 280. The price to sales is 130, when the standard price to sales ratio might be 6. So this stock, if you do a 6 price to sales ratio, let's just keep it there, should be $25 a share. Andrew, the thing that's phenomenal is how many companies, this is a $435 billion market cap company. How many big tentpole market cap companies, Nvidia obviously $4 trillion, Microsoft, these groups, there's just a handful of massively market capitalized companies, at the center of this AI story, all interwoven, making deals with each other on some shadow decision where, OpenAI itself does, maybe 16 billion in revenue at this point a year, which is just nothing in the U.S. economy. So, Andrew, I think it's just been such a terrific thing to throw money in a momentum trade on a growth stock. And it has worked for 2.5 years, so nobody's going to give up on it. But the numbers are astronomical when you look at the PE ratios and the underlying revenues.
Well, in fact, we're heading into earnings season next week with the big banks, where perhaps we'll get some more revelation about what's going on underneath there. Interesting on that point, JP Morgan, one of the first to report, Chief Executive Jamie Dimon, pointing to the fact that he feels as though there's heightened risk of a significant correction. Mind you, we did say between 6 months and 2 years.
Yeah, that's it. So we're in 3 years in the bull market, and the average bull market is 5 years. So he's using averages to say it's going to be 2 years because he wants to meet, somewhat within the statistical frame of reference. But there's plenty of bull markets that end at 2 years, and we're past that. So any time from now till 2 years from now, this thing can pop. We all get that. But we also have a situation that's very different than 2000 to pop this bubble earlier, which is we have no job growth in the United States, none. And that is going to run up against cutting spending, cutting down earning estimates, and any disappointment in stocks that are trying to bet on an economy that's flagging growth outside of the infotech sector. Good luck with that. So that's the issue that's different than 2000. In 2000, where it was a strong economy, this is not a strong economy, and that's what's going to start to pull this thing down.
Well, and in fact, that leads to prospects of further rate cuts, which obviously investors are betting on at the same time. That comes in the midst, of course, of the government shutdown. There's the absence of significant data to go on, and also how this is playing out for the US dollar. Actually finding it's actually made a bit of a comeback more recently.
Yeah, there's been some comeback in the U.S. dollar. I would point out, though, that, if you look at things like gold and silver and, pot and palladium, which, are the other side of the old dollar hand for the currency, it's all worries about the Fed. It's the Fed rate cuts, but it's more than that, Andrew. It's all starts in early August when, Lisa Cook took the hit on the, supposed fraud charge. And then worries about Powell even making it to his May 15th end of his term as the chair, which is not that far out, and it could end at any time. So I think the other here is just, along with dollar debasement, is just this flight to hard precious metals as a store of value in the face of what would happen if Trump and his minions got in there and ran the Fed like Turkey and did an Erdogan play and drove up a 10-15% inflation rate in the United States as a result of it. That's what the dollar story is. And why is the U.S. dollar faltering a little bit right now? Really, it's just a range story. It's played out for so long. There's some people probably covering some shorts in that play.
John, elsewhere, the energy sector remains under pressure, particularly the oil price, and that also comes off the back of that news of that, well, what looks like a breakthrough in terms of a ceasefire in Gaza. What's your outlook there?
Well, this was phase one, and obviously everybody has to be happy with a phase one deal that gets the prisoners back and released. That's fantastic news. Hopefully it does lead to a ceasefire that's durable enough to get phase two underway, and phase two gets taken seriously and gets done in a relatively quick period of time. I would not be holding my breath on this, though, Andrew. Both sides are trigger happy, and they've been fighting this for 2 years. And the only thing that's pushing them together right now is kind of a sense of exhaustion out of continuing to fight. But we've been here before. I think it was back in March when we were here before, and it fell apart. So we got to be careful not to bet that this is going to really happen until we see more of phase two, basically.
John, let's get to your three stocks in focus. Now, the first one is in the tech sector, which is obviously clearly a focus for investors at the moment. That is Zoom. I haven't heard much news of this stock recently. What's going on?
Yeah, Andrew, this is a classic story of what can happen on the back end of a bubble. Zoom Communications was, as your chart, the lower chart shows, a $560 a share stock. $560 a share. So it was like Palantir back in 2021, and look at it now. It's $80 a share with a PE ratio of 14. Now, I told you that Palantir has like 280 PE. If it goes all the way down there, it might be an $80 share stock like Zoom. So I just want to point to Andrew, this stock has done nothing but beat earnings for 5 years. And it has always beat earnings by 8-10% every time. So, great stock right now. Nobody cares about it. It's completely written off. It was shorted down over, looks like a year and a half. And once it got down to 2022 levels, it's gone nowhere for 3 years.
The next stock is in resources with a focus there on gold and silver. We know where those underlying commodities have gone. What are you watching?
Yeah, so Fresnillo is a Mexican producer of silver in Durango, Sonora, up in that area, the northern part of the country. It's actually a FTSE component. FTSE 100 it's domiciled at a corporate level in London. So this stock, again, this is the story of the August trade. You could have bought Fresnillo for $8 a share in January. It's 32 now on the ADRs. So that's basically a 400% move or a 350% move in 6 months. So silver's going up. It's a sister to gold, and it's this story that I want to be in precious metals as an alternative store of value, and that the debasement of the currency and the independence of the Fed and the cuts, all the same kind of story, is going to push everybody into these metals more and more around the world. So there you have it. There's the chart.
All right, and thirdly, John, let's take a look at a Japanese firm in Kyocera, and what this is, ceramics, electronics.
Yep, this is old company, and that started in 1959 with ceramics, and here you've got a story that's palatable for a normal person. You've got basically share price is at $14 a share on 50 cents in earnings, and it's cranking itself around. I would point out the big issue here is you can see those big red misses from late 2024 to 25. The company had some struggles in the last year, but they had a big earnings beat in the last quarter, and that's changed their story. So this is a stock you've got to like it from momentum change and an earnings perspective, because it's got that big beat. And it can go from 14 all the way back up to $17, $18 a share here. And you don't have any nosebleed valuations issues. And you have a story, this is a very diversified company. But what I found interesting, Andrew, I looked into it, is they have started kind of a venture capital firm late 2024 and to get themselves into AI. And this is an example of a very old firm that can just use, the legacy businesses they built up in telecom and electronics and all this, and start to adapt the new infrastructure and turn things around. So this is a name I actually really like, because if they get a hold of this new technology, take it into the context they have across dozens of businesses and dozens of industries, that could be very exciting for them.
John Blaine from Zacks Investment Research. Let's now turn our attention on where we're likely to begin in just a minute or so on the local market. SPI futures off 0.4% following global markets lower this morning. We'll get to see how that plays out as we get going in just a moment. Stay with us.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.